Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on retirement. This is problem number 17 on partnership account and lecture number 2 on the chapter retirement. I would like to request all my viewers to see the playlist section of the channel where I have uploaded lectures on accounts, costing, financial management and management accounting. Students can communicate with me through email which I have given in the description box. Ashit, Ajit and Ashim were partners in a firm sharing profits in 2:2:1 ratio. On 31st March 2021, Ajit retired from the firm. On the date of Ajit's retirement, the balance sheet of the firm was as follows. On liability side, we have creditors 54,000, bills payable 24,000, outstanding rent 4,400, provision for legal claims 12,000, capital accounts of Ashit 92,000, Ajit 60,000 and Ashim 40,000. And on asset side we have bank 55,200, debtors 12,000 less provision for bad debt 800, 11,200, stock 18,000, furniture 8,000, premises 1,94,000. Total of assets and liability side, we have 2,86,400. On Ajit's retirement, it was agreed that premises to be appreciated by 5% and furniture by rupees 2,000. Stock to be depreciated by 10%. Provision for bad debts to be adjusted at 5% on debtors and provision for legal claims to be increased to rupees 14,400. Goodwill of the firm to be valued at rupees 48,000, but the same should not be shown as an asset. Rupees 50,000 from Ajit's capital account to be transferred to his loan account and the balance to be paid by check. Prepare evaluation account, partners capital account and balance sheet of Ashit and Ashim after Ajit's retirement. So here we have to prepare the revaluation account, the bank account, partners capital account and the balance sheet. So I have prepared the structure of these ledgers and now we are going to post the figures which are given in the question. So in the balance sheet, the first item is the creditor. So there is no adjustment entry or regarding revaluation of creditor. So we can safely write the balance of creditor in the new balance sheet. This is the balance sheet that we are drawing after Ajit's retirement. So what is the balance of sundry creditor as given in the existing balance sheet? So this is 54,000. So I am writing here creditors 54,000. Next item is bills payable. So there is no adjustment entry regarding bills payable also. So here I am writing the balance of bills payable in the balance sheet because this is the ultimate thing that we have to draw after the Ajit's retirement. So whatever balance is there in the existing balance sheet before retirement, we have to make necessary adjustment with those figures and then we have to draft the final balance sheet after Ajit's retirement. So the first balance I have already recorded, that is the creditors balance 54,000. The next balance is bills payable. So bills payable is rupees 24,000. Thereafter the outstanding rent. So the outstanding rent is rupees 4,400 and there is no adjustment entry regarding outstanding rent also. So outstanding rent is 4,400. Then provision for legal claims. Provision for legal claims. So what is the balance given in the balance sheet? This is 12,000. So there is an adjustment entry given regarding provision for legal claims. So it is given in the adjustment point number 2 that provision for legal claim to be increased to rupees 14,400. So there is a revaluation of provision for legal claim. So in revaluation account, I am writing revaluation account debit to provision for legal claim, because there is a increase in the liability by 2,400. So there is increase in liability for rupees 2,400. So the journal entry is revaluation account debit to provision for legal claim. And the amount is rupees 2,400. So in the balance sheet I can write here at revaluation rupees 2,400. So this is 14,400. Then the balance of capital is given. So we have to record it in partner's capital account as by balance BD. That is the brought down balance. So the capital of Osit is rupees 92,000. Capital of Ajit is rupees 60,000. And of Asim is rupees 40,000. So this way I have recorded the balances which are given in the balance sheet before retirement. Now you come to the figures which are given on the asset side. So the first item is regarding the bank balance. So in bank account, I am writing here to balance BD. So this is rupees 55,200. Next figure is debtor 12,000 less provision 800. So the net balance of debtor given is 11,200. Now in point number 2, in the adjustment entry, it is given that the provision for bad debt to be adjusted at 5% of debtors. So there is a revaluation of debtors. So and what is the provision? This provision will be 5% of the present debtor. So this will be 5% of 12,600. So now the new provision required is rupees 600, but in the balance sheet, existing balance sheet, the existing provision is rupees 800. So there is a decrease in the value of provision. So in the journal entry, in the revaluation account, we have to write by provision for bad debt account debit, that is provision for bad debt account debit to revaluation account. So provision for bad debt. So provision for bad debt, this will be 800. This is the existing provision and the required provision is 600. So 200 is the balance of decrease in the provision for bad debt. So in the asset side, we can write safely, this will be the balance of bank from the bank ledger, and thereafter the debtor balance. So debtor balance is 12,000 given less provision for bad debt. Provision for bad debt is rupees 600. This is 5% of debtors. So this will be 11,400. Next, the balance of stock. So there is also an adjustment entry stock, that there will be decrease in the value of stock by 1,800. So revaluation account debit to stock. This is the journal entry. So revaluation account, I am writing to stock account. So there is a decrease in the value of stock by 10%. It is given in adjustment entry 1. So revaluation account debit to stock, this is 1,800. And in the asset side, I can write here stock 18,000 is the original balance, and there is a revaluation by 1,800, rather it is devaluation of stock. So the net figure of stock is 16,200. Now next item is regarding the furniture, and the value of furniture will be increased by rupees 2,000. So there is a increase in the value of furniture by 2000. So furniture account debit to revaluation. So in revaluation account I have to write by furniture account 2000. Furniture account debit to revaluation, and in balance sheet I have to write furniture. So 8000 is the balance as given in the balance sheet, plus 2000 will give you 10,000. And the last item is the premises, and the value of premises will be increased by 5%. So premises account debit to revaluation, this is the journal entry that you need to pass. So by premises account, so 5% of rupees 1,94,000 is 9,700. So there is an increase in the value of premises by rupees 9,700. And here you have to write premises 1,94,000 plus 9,700. This will give you 2,03,700. Now we have to see what are the other adjustments given in the question. So first of all, let us close the revaluation account. So you can see that there is a profit on revaluation. So on the debit side, there is a balancing figure, and the sum total of the credit side is 11,900. And the profit of 7,700 will be distributed among partners Ashit, Ajit and Asim in 2:2:1 ratio. So here I can write two partners capital account. Ashit, Ajit and Asim. So 3,080, 3,080 and 1,540. So in capital account you can write by revaluation account. Now in point number 3, it is given that the goodwill of the firm to be valued at 48,000, but the same should not be shown as an asset. So in capital account you have to increase the value of goodwill by 48,000. So this rupees 48,000 of goodwill will be distributed among the partners in 2:2:1. So 19,200, 19,200 and 9,600. So this is the amount of goodwill that will be credited to the existing partners capital account. Now since Ajit is going to retire, we have to write off the amount of goodwill. So on the debit side of the partners capital account, you need to write to goodwill account. And this will be distributed between Ashit and Asim in 2:1. So 32,000 and 16,000. Now we have to close the capital account because all the adjustment entries I have covered. So what is the situation of Ajit's capital who is going to retire? So the credit side of the Ajit's column is 82,280. So out of this 82,280, 50,000 will be converted as a loan. So to Ajit's loan account 50,000. So this amount of 50,000 we have to record in the balance sheet. So in the balance sheet I am writing here Ajit's loan 50,000 and the balance 32,280 will be paid. So you have to write here to bank 32,280. So 50,000 has been converted to Ajit's loan account that I have recorded in the balance sheet, and 32,280 will be paid from bank. So in bank account you have to record by Ajit's capital account 32,280. So the balancing figure in the bank account represent the closing balance of bank that will be recorded in the balance sheet. So you can see that the bank balance is 22,920. So in balance sheet I can write 22,920. Now again you come back to the partner's capital. So the sum total of the credit side of Asit capital is 1,14,280, and this will be the closing balance of Asit. So to balance CD is 82,280. And the sum total of the credit side of ACM is 51,140, and the balancing figure is 35,140. So the closing capital of ACIT 82,280 and that of ACM 35,140 we have to record in the balance sheet. So ACIT's capital 82,280 and that of ACM capital is 35,140. The sum total of the asset and the liability side is 2,64,220. So I hope that all students have recorded the question in your notebook as well as the solution the way that I have solved it for you. If you find any difficulty, please write me in my email that I have given in the description box. Thank you. Thanks for watching the lecture.